Good afternoon, everyone. Welcome to Elite Currency. My name is Chris. I'm very excited about today's webinar where we take a look at the Forex market, specifically with HARP charts. And my goal today is to really show you how simple it is to read the trend with HARP charts. It's a piece of cake, basically, momentum as well. And I'm going to show you why and how. And the good thing is that you can, at this point, get a whole month access to HARP as a trial. So you can, while we're having these webinars throughout June, by the way, you can also look along and practice and use it yourself for an entire month. So that gives you the opportunity to benefit from that. I'm going to show you how in just a second. First of all, please be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video or webinar as well is for educational and informational purposes only. And by continuing watching this video and webinar, you agree with this disclaimer. Plus, you are aware of the risk involved when trading. Alrighty, good. So let's first of all quickly explain that our names are Nenad and Chris. You probably know us from Admiral Markets, where we give free webinars, of course, and a lot of analysis and content. This is already old. So today, just a quick introduction, but I want to more basically focus on live charts, all right, because it's a bit more, it has more, I think, value for you. But the trend is so easy with HARP. Basically, we're looking for green Heikin-Ashi candles together with our special indicator here at this one, the second one here, all right, this one. If that is dark blue, it's in a strong momentum to the upside. If it's dark red, it's strong momentum to the downside. Even forget the downside one, right? It's as simple as looking at those two things. So if you have those two things aligned, you have a trend on that time frame. Okay? Is that clear for everyone? Let me double check here. I think it should be, right? You got green candles, you got dark blue oscillator. You have dark red candles, right? And you got dark red oscillator. Straightforward, right? All right, that's the trend on a trending chart. Now that trend could be on any time frame. This HARP system, HARP charts can be used basically on any time frame. As long as you find a trend, you can use that as just first starting spot. What we do want to, after that, what you do want to do is take a look at filters. Are there any levels that are very, very important close by that could stop the trend? All right, could be a big news event, could be an NFP, it could be interest rate days. You got to check those things. Third, momentum. Once you have a trend on a time frame, let's say it's the 4-hour chart, what we do is then zoom in one time frame. In this case, if it's a 4-hour trend, you zoom into the hourly chart and you check if the momentum is still there, and we're looking for a pullback within that momentum. All right, so what we're looking for is a trend. All right, we want basically a pullback within that trend and a continuation of momentum. All right, we're looking for this for upside and we're looking for this for downside. All right, so that's the third step. The last step is a continuation. So once we have trend, got the pullback, and we got new momentum going on, we're looking for a continuation trade either on the momentum chart or on a lower time frame. So if there's a trend on the 4-hour chart, all right, it depends what the hourly is showing. If the hour is showing momentum, then we zoom into the 15-minute chart. All right? But how about if the 4-hour has a trend and the 1-hour chart doesn't have momentum? Then we stay on the hourly chart. Then we don't go to the 15-minute chart. Is this clear? Is this point clear? So if we have a 4-hour trend, we zoom into the hourly chart. Then we check, is there momentum? And if there is, great. We continue to one time frame lower because we're capitalizing on, the power of that currency to keep on going, either down or lower. If the momentum is pausing, right, then we don't want to zoom in. We want to stay on that time frame, on the hourly, and look for a continuation within that trend. Is this clear for everyone? Please, yes, no. This is a 4-hour trend. So 4-hour trend, 4H, all right? Momentum, yes. On the hourly, then we go to the 15-minute chart. No, we stay on hourly. Okay, so that's how we do it. We can use this concept on, you can use it all, this is just an example. You can use it on all time frames, right? Let's say we find a trend on the monthly chart. We can zoom into the weekly. And if we don't see momentum, then we're looking for a weekly setup. We could do that. Now, maybe not many of us are weekly traders, but you could use it as a swing setup as well. If the weekly chart has momentum, we dive into the daily chart. All right, so you can use that concept on all these time frames. All right, okay, good. So now let's take a look at the charts. Now that you know what we're looking for, and I want to make you aware that you have the whole month the potential of trying these charts for free. You can go to live trades. You can go to, first of all, you can go to live Forex trading webinars, and you can go to live HARP charts. Now, the thing is, these two pages are very important. Elite currency, live trades. You have to go to live trades. It's very important because you don't get 2 weeks trial, you get the whole month of June. The whole month of June, you can try it. Go to MT4 trading account number and your email address, and you can start this trial. Okay, that I think is important because then you can look along with these webinars in a different manner, a more engaging manner. Next is also important is click on live Forex trading webinars. You already registered for 4 of them. That's today and tomorrow, besides last week. But we added another 6 webinars throughout whole of June. So the whole of June, not only will you have a trial with these charts, but you get accompanying webinars twice a week. So I'm very excited about that, and I really hope that you guys and girls would join these webinars and try out the trial. All right, so with that said, let's take a look at these charts. All right. Most of these things are part of the HARP trial. Sorry, I should say are part of HARP charts. The problem is that the trial itself, there are quite a lot of indicators on this. If I would have to compile everything for everyone, it would be too much time. But you'll get the most important things that you can use. All right. Let's take a look and apply this concept. All right. Let's take a look and find a trend, if we can see if we can find a trend. Now, the euro dollar monthly chart, do we see a trend? No. And the reason is why simple, because the monthly candles are light red, indicating a retracement, and our main oscillator here is blue. So there's not a trend on the euro dollar monthly chart. That does not surprise us, obviously, but it's also confirmed with our rules. We can do this on all time frames. I'm not going to bore you, of course, with looking at 20 currency pairs and 10 time frames, if we have those, or let's see, 2, 4, 6, 7 time frames. But we could do it if you wanted to. Weekly chart has a green candle, all right, but it doesn't have a dark blue one. You can see here that the euro dollar was an uptrend here, on the weekly at least. Not at this moment. Daily chart is an uptrend. You got a green bar, you got blue candle, all right, so that is indeed in uptrend. And for those that are looking at ACU Murray Math strategy, you also have that with our special ECS MACD that also indicates an uptrend. All right, so that's confirmed. So daily trend, what do we see on the, does the 4-hour have momentum? Daily is a trend, does the 4-hour have momentum? And the 4-hour did have it right in here, all right, but not anymore. The momentum has been lost. You can see here it's retracing, all right, but otherwise everything is bullish. Everything is bullish. Let's take a look at these oscillators. These oscillators confirm everything. You see retracement. We are still in blue. This is retracement, and this is the moving average oscillators that are showing everything above the 0 line. Everything is aligned to the upside. Green candles as well, but this is retracing. All right. So momentum is not here, but you can see why things are ready for a continuation to the upside. So we don't zoom in because there's no momentum on the 4-hour. So I would stay on this time frame. All right, that's the plan. And I'm looking for the first dark blue oscillator to appear right here. That would be the entry at the candle close. All right, and with the stop loss below the previous fractal, which is here. That is a long setup using a swing strategy. This is a swing strategy because it's a 4-hour chart. As a continuation of this, all right? Now, you might be wondering, what are these diamonds and circles, all right? And basically, they guide us in what direction to trade. You always want to trade in the direction of the diamonds. Those are fractals. All of these are fractals, but they are coded to give extra information about what direction, if there's a trend, and what direction to trade. Green diamonds are trends, either red for down or green for up. We have a diamond on the euro dollar. So that means we're looking for the upside continuation. All right? That is the entry and the stop loss. Okay? Now, target is something that is discretionary done. And if you ever wonder about the target, you can always reach me and ask me. In case of the euro dollar, I would probably be aiming for 115, just below 115. It's a psychological round level and strong resistance spot. So if an entry is somewhere around 113.80 and the stop loss is around 113.10, then that's 70 pips risk. And the target is about 110. So it's about the R2R, the reward to risk is about 1.5 to 1. And is okay for a trade. It's not fantastic, but it is decent enough. Now, we don't have to stop this exercise here because you could still zoom into the hourly, and maybe the hourly has momentum as well. It's possible that there could be different configurations. It's possible that the daily chart could be in a trend, the 4-hour isn't, but the hourly does have momentum. So what do you do then? You can actually zoom in to the 50-minute chart. What basically that means is that because of the daily trend, you have an opportunity on the 4-hour chart for a trend continuation. Because of the hourly momentum, you actually have a chance also to take a 15-minute setup basically as a continuation as well. So you have basically a setup on 2 time frames. Now, if they're contradictory to each other, if this is down and this is up, that is something you want to be careful of, and you might want to skip the 50-minute setup. If they are both up, right, then it depends on what you like. You could take one or both, right? It's up to you. Depends on your risk management and stuff like that. But both are available. This can happen, and I think we will have plenty of examples as we go along. Of that. All right. This can also be used for scalping. So it's very universal. Let me show you why on a 15-minute chart. What I like to do is have 15-minute momentum on my side. So the pound dollar has been a very volatile pair, as you can see, with this burst up. So maybe not the best example, but just for example's sake, please allow me to show you this pound dollar and how the same concept can be used on these lower time frames. So instead of looking at the daily, the 4-hour in combination with the hourly, we're going to look at the 15-minute, the 5-minute, and then the 1-minute chart. All right. So if you're not a scalper, just bear with me, and we'll take a look at higher time frames or medium time frames in just a second. So we see that 50-minute chart is trending. Where and when? Here. We got dark blue. We got blue candles. You can see these candles are a bit different than the hourly, as you can see. So basically what I do is I look for, when I use the trend, I use these Heikin-Ashi candles. When I look for entries or momentum, I use these blue-red candles, which are proprietary candles from Nanette myself. All right. So do we have momentum here? Yes, we got blue candles. Price is above the moving average band. We got blue. That's the most important. Blue. This is the most important. Always remember. But we got confirmation from the momentum sigma, and from our special own self-developed oscillator. Why? Because everything is above the zero line here. As you can see, this is above the zero line and this is above the zero line. All right. Now, if you go for HARP, you won't have access to MACD because that is actually an AccuMurray math indicator that I have added for my own benefit. All right, so just bear with me on that. But you would have access to the other three. All right, so that should be enough. 3 is more than enough. Anyhow, so let's take a look at, this is momentum. So when we have momentum, what do we do? I'm going to ask you, so I'm not the only one talking here. What do we do when we have, in this case, it should be, I should say, a trend. Well, it really doesn't exist, the trend on the 50-minute chart, but you have clear directional movement, all right, on one time frame. What do you do then? We're always looking for a pullback, right? Once we have a good direction going. Ergo says trade in direction of momentum. Absolutely. So we're only looking for upside. That's point one. Indeed. After that, when we see good directional move established, we're looking for a pullback. And we're looking to do that by zooming in. So let's zoom in. All right, let's zoom in. We're looking for a pullback. All right, let me make these extra big here, this one particularly. All right, good. So this is when we got the Q for upside here on the 50-minute chart. This is the pullback right here. You see the oscillator is thinning. And then we get the thick again. Right there, that is the entry. Right there. Now, we have multiple ways of entering. This is not the only way of entering. But if I talk about other setups and other entries using HARP charts, I am scared I'm going to confuse you. I'm scared actually that last week I confused many people. So I don't want to make that mistake that I did last week Wednesday. And I just want to focus on one kind of entry. But we have also entries using these candles. We have entries using these arrows and fractals as well. We have multiple ways of engaging the market like that. But I want to focus on this one. All right. So we got a thick, that means momentum is back. That means the entry is right there. And we're looking for a stop loss below the fractal. Right there. So that's an entry, and boom, we got the upside on the pound moving almost 100 pips from here to the very top, 80 pips actually. And if we're looking for an exit, well, the pivot point would be good. In that case, that would be the most logical spot. We're looking at a 50 pipper versus about 35 risk. If we trail stop using these fractals, then we'll probably exit a bit lower. All right, or if we look at for the first arrow or second arrow against us, right, that would be about the same exit actually. All right, so 50 pips, great. And if we manage to get more, even better. All right, now the cool thing is we could actually do the same with scalping. All right, now I want to give a bit of a warning here because I am not a big expert on the 1-minute chart. And I've not done trading on a 1-minute chart all too much. So I want to give a bit of warning that don't know enough. I've done trading on the 5-minute chart plenty, but the 1-minute chart is a bit of, I've done a bit, but I need to do more. So I want to give a bit of warning. I'm not saying that this is ideal to trade, but I think it's worth exploring because I do think that the principles should work when you get a good momentum like this, for instance. All right, and as long as the 15 keeps trending and the 5 at the same time, I think that the 1-minute chart should be okay. All right, that's scalping, of course. So let's take a look at that. But mind you, as soon as 5 or 50-minute loses that momentum, then it's a market exit out of that position. Let's take a look. All right, so here we go. So we got the upside, we got the 5-minute, let me check where the 5-minute momentum is. from here, indeed, 1105. Okay, 1105. Remember that 1105. 1 second, folks. Okay, there we go. 1 minute chart. All right. So what we're looking for in a 1 minute chart is a pullback, right? Pullback. So if we use the oscillator entry in any case, if we're using the arrows, we might even be entering here. But let's stick to the oscillator. All right. Oscillator gets a continuation. Let's see. We have momentum here. So we're looking for the first continuation, which is this candle, in fact, right here. Right there. That's the first entry. Then the next one, we lose momentum here. That's the pullback. This is the second potential entry. We lose momentum here again. Here's the continuation. Third potential entry. Fourth. Fifth. Sixth. Sorry, that's the wrong one. I mean, this one, of course. Excuse me, not this one. And there another one. Now, are all of these all worth it? No, right? Definitely not. And that would be too many in around the same area. But you can see that, especially at the beginning, they are the strongest, of course. What I do is use this basically Fibonacci target tool to understand how much space we might have left. Of course, the pivot points too. I'm not going to take this particular setup right here when price is so close to the pivot point here. But if price peaks above it and then goes sideways and then retraces back like this, right, and then shows another one, it might be worth it. But the 5-minute chart has to be still trending. I'm not sure if it was trending at this point. We'll double check that in a second. All right, 11:54. Let's double check that. But what I wanted to say is, accompanied with the trial, you would also have this Fibonacci target tool, and we see, that the fourth level and the fifth level, those are strong targets. All right, so I wouldn't take a trade right into the fourth, but if we break above the fourth, then there could be a trade up to the fifth. Also here, basically, this one is a good setup because we're above the third, and this one, of course, because the price is just consolidating after that. Even here, that's okay, right? Especially at the beginning, those are good setups. So did we have momentum on that particular one at the 5-minute? Yes, we still did. Look, the momentum was still there. Actually, we lost the momentum right here. You see, this is where we lost the momentum on this particular time frame on this bar. This is live. It's not repainted. It will not repaint. That's when we lost the momentum. So if we dive into the 1-minute chart, that's from that point, from this green point, we would not take any long trades anymore. All right, this is over from here on. No more trades, no more scalping trades to the upside. And that's true for all time frames. All right, and so you have to keep always a track on one time frame higher to see if the trend, the momentum is still alive. If it isn't, it's over. So once we lost this momentum here on this bar, all right, the 1-minute world, the 1-minute trades that we had here in this part, all right, in this section here, we have to close them, exit them, especially if you're scalping, and we stick on this 5-minute chart. No more 1-minute charts. And there could be a 5-minute setup, but it depends if the 50-minute chart must keep its momentum. And if it doesn't, then we're not trading that, all right? And the 5-minute chart lost its momentum too. Not so much later, as you can see, the 15-minute chart. The 50-minute chart lost its momentum here, which means we're not trading on the 5-minute chart anymore from this point onwards. And maybe we're trading the 15. It depends. Is there an hourly trend? There was, so we might still look for a 50-minute setup. All right, and the 50-minute chart setup potential is actually right here. This candle just appeared actually. That could be a 50-minute setup looking at the hourly the momentum, but we already lost momentum in fact right now. So no, 50-minute chart, we didn't have momentum. We didn't have an entry. Why? Don't want to make it too complicated, but the reason is because when we had momentum on the hourly chart, we didn't get a signal here. All right? Why didn't we get a signal? Is because look at this. We didn't have any turn of this oscillator. It kept falling. So no, it's very easy. No signal. All right. We got a signal here just recently, but if you zoom back to the hourly, what happened? We lost momentum. So there's no entry on the 15. Once we lose momentum on the hourly, we're not sticking to the 50-minute chart, which means our current time frame, what we're looking at, is hourly. We're not even looking at the 15-minute chart anymore. All right. So this is how we went from a 1-minute chart, folks, all the way to an hourly. We managed to scalp it in the morning and managed to notice the momentum going away, dying down, zooming out to the 5, zooming out to the 15, and then zooming out to the hourly without, let me check the 5-minute chart, but without any consequences, I think. Let's see. 5-minute chart. All right, this could have been a setup 5-minute here, and we lost it here. You got to exit when the momentum is out, though, on this time frame. As soon as you lose the momentum, you want to exit as well. So in that case, that was a small loss with that one. On this particular setup, I think, no, let me double check the 50-minute chart. No, we lost the 15-minute momentum already. No, this was, wow, look at that. We didn't even take this setup. Would have been a loss, but because we lost the 15-minute momentum, we didn't take it. We didn't stay on this 5-minute world. All right. So look at that. You were able to catch 5-minute setup, 1-minute setups, maybe even 50-minute setups when the price was going up like this. But as soon as momentum died down, we went from 1 to 5 to 15-minute setups without taking a losing entry there. And that's so important to avoid these entries where it looks like it's going to continue, but it actually doesn't. That's a massive advantage. All right, so 1-hour chart, that's what we're at the moment. All right, we could be looking at the 1-hour chart, but we need a 4-hour trend. Do we have a 4-hour trend? We do. We do. We have green candles. We have blue oscillators. We do have a pound trend. All right. Now, it's not a great trend. Why? Because I do like to have my good old diamond. All right. Diamond, recent diamond. That's a faraway diamond, but we don't have it. So that's the only thing missing. These circles, these black circles here, indicating that price is basically in a triangle. All right. And it's not so strange. If you look at the daily chart, you can see price is more or less going sideways. So we got momentum on the 4-hour to the upside, and we're getting a retracement on the hourly. So what would make that different? We need basically this to turn dark blue again, and it could be an hourly swing setup. All right, that's the time frame to look at on the pound at this moment. The pound, the best time frame for the pound is based on the 4-hour and 1-hour worlds at this point. Not the daily, not the weekly, not the monthly, because they're all retracing, they're all gray and retracing. All right, so now we have that information, but we can also look at other pairs. Is the pound, maybe there's another pair that's better at this point, right? Maybe the other pair is trending more than the pound. Maybe, obviously, if you have pairs where you have multiple time frames trending, could be stronger, perhaps, right? So that's something, of course, that I tried to do last week, was try to give you the setups that I thought were the best. On Tuesday, I was, showing the pound odd live trade I was in. I was showing you the euro odd setup that I thought was good, right? Both ending up for about plus 90 pips. What I should have done was explain in detail better the process, I think. So that's what I'm trying to do right now. But the pound used I think at this moment, the correct time frame is the hourly to look for setups. Once we get momentum, then it's possible to go back down again to lower time frames, right? All right. Now, I'm not saying that the hourly is necessarily needed. If the 15 has momentum, that's fine too. All right. But I wouldn't like to trade the 15 against the hourly. I wouldn't like to trade to the downside if the hourly is up. But if the 15-minute, if the hourly is not trending, is retracing like this, all right, but is bullish, and I'm trying to scalp, then, and the 15 is momentum, that's fine. All right, maybe this is getting too advanced, but all right, anyhow. So, all in all, I was saying the euro dollar is a 4-hour setup, the pound is an hourly setup, right? That's what we concluded. Let's take a look at more examples. Let's take a look at the Aussie or the Kiwi. Kiwi, does it have, let me do this exercise. Are you ready? Do you have your keyboard next to me? Let's do this exercise together. Monthly, let me draw this, let me renew this template just to be sure. Good. So let's make this bigger. All right. All right. Monthly, do we have a trend on this time frame? Yes, no. We got light red candles and a dark blue oscillator. Is this a trend? All right. I got two answers here. And the answer, there's no right or wrong, folks. This is all just, I just want to make sure that everyone is on board with this, okay? And the answer is no, there's no trend. So great job, Nuno, Marco, and Ergo. All of you had that correct, indeed. Because there's no alignment. Once again, we're looking for alignment. We're looking for green or blue, bullish candles, basically, and bullish oscillator, or bearish candles and bearish oscillator. Not only bearish, but dark. We want dark red or dark blue. Dark red and green, light green, unfortunately. Okay, so weekly chart. All right, I'll make that easy for you. Weekly, yes. Actually, there is a trend at this point. We got a light green candle and a light blue, dark blue oscillator. Now, this candle's not closed, so it'd be better at the end of the week to see how it closes. But intra-week, let's say, is bullish. So yes, daily. Is this uptrend at this moment? Is the daily chart on the Kiwi in an uptrend? Yes, no. That's for you now. All right, I got 3 answers. Anyone else want to voice their opinion? And if it's wrong, please, no worries. This is not any problem if there's a wrong answer. All right, great. So I have 4 answers, all of them yes. And indeed, great job. It is a yes. And once again, you got the combination light green, dark blue. Perfect job, guys and girls. It is a trend. So we got weekly. The weekly is a bit of a toss-up, but we got daily for sure. That's without any doubt, right? So we can zoom in to lower time frame. We're looking for a pullback. Remember, retracement. So 4-hour chart. All right. Do we have a pullback? Well, we did. That's why I'm in it along. All right. And that's why I took a setup. We had setups where? We had setups here on this bar. Right here on the Kiwi. All right. That was an early setup, but the daily was up already. All right. So an entry there. Remember, the stop loss below the fractal. The fractal are these diamonds and these circles. That's where we put the stop loss, 50 pips. Trade, if we're still in it, if we, would be, more than 100, 150. All right, so besides the uptrend of the day, we got the green diamond, so we always want to trade in the direction of the green diamond. So the next setup was, here's the retracement. Once again, here's the retracement, here's the retracement. So we got 2 more setups on this bar and on this bar. All right, I took the one on this one, but there was another one here. Now, do you want to take 2 setups at the same spot? No, I'm not. That's not good. But if you take one setup, right, and there's another one coming up a bit later, that's fine. All right. Now, on a 4-hour chart, I didn't use this fractal. That's a bit too far for me. I use a tighter fractal and didn't go that far. All right, but that's probably a bit more advanced material. So now we do have a fractal. So anyone who took it takes it now could use this, of course, where I have it as well. Okay, but now those were 4-hour setups, 3 setups in the 4-hour chart. But now we have momentum on the 4-hour chart, which means the 4-hour opportunity has been passed. It's already happened in the past. We had it. I'm in that trade, right? But we got new momentum. So we got daily up, weekly up, daily up, 4-hour up. So now that we had our setups on the 4-hour, we can zoom in again because momentum is back on all these time frames. And look at that. We have momentum on the hourly here too. So did we have setups on the hourly? Let's check it. Did we have it? Sorry, let me refresh this template. Let's check. We have momentum from here. All right, so no, not yet. Not on the hourly yet. Not using the oscillator at least. All right, if you would have, the arrow setup was here. Basically, the candle switch was here. So there are methods to still trade that, but not looking at the pullback. All right, the pullback actually still has to happen. The reason is because we need a retracement. We need this to turn light blue and then dark blue again. All right, that's when we get an hourly setup. So at this particular time, as long as we keep the momentum on the 4-hour chart, remember, as long as we keep the momentum on the 4-hour chart, this is a potential setup on the hourly. What we need is a pullback and then the first dark blue oscillator again. That's a setup on the hourly. Just like we had on the 4-hour here, we would have it on the hourly. All right. Now, you might say, hey, Chris, well, we can wait for that. We can zoom into the 50-minute chart too because we have momentum. And that's correct. We could. As soon as we have actually from this spot here, we have green alignment, we can zoom into the 50-minute chart to look for that pullback. All right, so let's do that. And you see at the open of today, we had setups available. Let's see, this was the moment we switched. So we had a setup right here. This is where you got thin, thick, thin, thick, thin, thick, thin, thick. So you had a couple, as I said, you don't want to take all of these changes. But if you take the first one, you don't want to take the next ones. You just keep this trade as it continues with momentum. Look at these dark blue candles continuing that momentum. And the trade is up at this moment 36 pips using this 15-minute chart. All right, so that was an example where more things are aligned, where currency pair, well, a lot of time frames show harmony, basically. Some time frames don't show harmony at all and don't have trends. All right, and an example, I think, well, at least the last time I looked, it was the Euro New Zealand. Now it has some momentum to the downside, okay, but looking at the monthly, the weekly, the daily has a bit. Okay, I didn't look at the Euro New Zealand maybe properly, but the daily, the hourly does. Okay, so this is not a great example. The hourly has momentum to the downside from this moment. So what would be the setup? The setup would have been here. This entry, this is the entry candle, or this could have been another one right here. All right. Now, if it ventures all the way up to blue, like this, then you're not waiting for red, but you're waiting for the loss of momentum. All right. Not necessarily for. That's a bit different scenario. All right. All right. Good. So yeah, some 50-minute trading potential to the downside on the Euro New Zealand as well. So this is something you want to be careful of course. If you're trying this, you might get basically the freedom might be too much in a way, because you can look at a lot of things. You can look at a lot of time frames, and you want to be careful not to get overwhelmed by that at the start. But eventually, I think maybe best is to choose the time frames you always look at and just stick to that. But the cool thing is that once you get used to it, once you get more experience in it, then there is no border regarding time frames, and there is no limit from that point of view. And so there is a lot of freedom, I think, and I think that uh, there will not be a lack of opportunities. Now, in higher time frames, if you're really trading the daily chart, of course, it is true. There's just not many daily candles. So that's going to, I think that's with every strategy. You're going to have to be a bit more patient with a higher time frame, like looking at a weekly in combination with the daily, right? It is possible though. And I think that, let me see, let me find an example for you. Um, Euro yen, for instance, right, is an example. Let's take a look at that. Monthly, bearish. Weekly, bearish. Daily. Daily chart had a setup right here. Let's take a look. Let me check to be sure where the trend is. All right. Right here, this candle. Right, so that would have been the entry. Stop loss above the candle high or above the fractal right there. And you get a 1-to-1 or 2-to-1 maximum trade. All right, depending on where the target is. Or a market exit if we see that this candle is going against us, or we're at break even, or depends exactly on the trade management, which is another topic. All right, but that's something that we probably will not have time for today exactly. But you have some ideas at least how to exit. Remember, always important. If you're, for instance, in this Kiwi 4-hour trade with me, all right, as soon as this 4-hour momentum, no, sorry, we're looking at the daily chart. Sorry, this is a daily trend, 4-hour retracement. So as soon as the daily chart loses momentum, we're out of that trade. Then there's a market exit, immediately market exit. On a 4-hour chart, if we lose momentum, it's not a disaster necessarily. It depends on context, and a good thing to do is move the trail to below candle lows, for instance, to protect, to reduce the risk, or just use basically a market exit as soon as you get two candles, two arrows or one arrow against you. Use fractals to move the stop loss, etc. There are a lot of options we can discuss, but that will be in a different webinar. But one thing is for sure, if we lose momentum on the daily, we're out. If I'm taking a trade on the hourly, right, and I lose momentum in the 4-hour, I'm out. Market exit immediately. Because this 1-hour setup is basically based on the momentum and the trend of the higher time frame. So if that higher time frame loses that, it's not good. Not good. All right? Aussie was also a bit of an example today. We got 1 hour. Let's take a look. We got, what do we have here? We have daily is up, 4-hour is up, 1 hour is up. So 4 hours up, and we had a 1-hour retracement. So we had entries here and here, here, and here. Now, once again, you don't want to take all four, all right, but it's clear that you have all of these setups are in the profit at this moment. You got green diamonds as extra confirmation. That's the direction you want to trade to. And all of these are dips for upside. So those were hourly setups, all right? Now, the news event here, I won't look at the 50-minute chart because that's a news event. I will not look here because of the news event. But the 50-minute chart had setups too. As you can see, I'm in one here. Not going that great. So as the 1-hour chart loses momentum, you want to get out actually. Now I stayed in. That's a bit of a discretionary call that I did. Momentum is back, so that's good for me. From a discretionary point of view, I did that. But in general, until you get more experience in making those calls, you want to stick to that rule and preferably be careful when the higher time frame loses momentum. All right. But eventually, depending on circumstances and context, how far is price from support or resistance, you can make that judgment if you want to stay in that trade or not, or reduce risk, etc. All right. Alrighty. So it's basically those three things. We're looking for trend, pullback, continuation, using the candles themselves, the colored candles, and the oscillator. It's that simple, and you can see which time frames are ready for potential trades. Yeah, for those of you that have already asked for a trial, there could be a bit of delay indeed. I have not managed to send the people who have asked over the weekend as yet. Uh, just time wise didn't make it. But it's going to be sent very soon. So if you want to join, if you haven't done that as yet, by all means, please you can do that by going to this tab here, HARP charts, and you'll get just add your MT4 trading number and your email address. You can do the same by going for sign up for free, 2-week free trial. And you can register for the webinars when you go to live trades and then Forex trading webinars, and you can register for the upcoming 6 webinars as well. All right. If you already sent it, but you didn't receive the material, I'm going to really do my best to send it as soon as possible, but I think that's going to be tomorrow, Wednesday, the 8th of June. All right, folks. Well, I hope that's clear regarding the trend. So remember that these colored candles and the momentum indicator are the primary things for trend. This is what you're going to get access to. There are other indicators that unfortunately it takes me quite a lot of time to set up a trial for you because we need to lock and protect the indicators. So what you'll get access to is 3 indicators, which will be a good indication of how you can trade it. There will be some things you don't get access to in the trial, like these diamonds and stuff like that. Uh, that is something that once you sign up, you will get access. But the 3 indicators, there's 3 special indicators that you will get access to will be enough for you to get a good impression, plus these webinars. If you decide to sign up, the HARP charts are 99 euros per quarter, or in other words, 33 euros per month. So we decided to go for what we hope is a price that is manageable for you. This is what we think is doable. We hope so you can enjoy the webinars and enjoy the charts, of course, as well. All right, so that wraps it up. Thank you so much for being here. I really appreciate it. I hope that this gave a bit more clarity about how to use the charts regarding trends. I will dive into new topics in the next webinars, and wish you all great trading. Cheers, everyone.